notification that says that you've won that property, you're the winning bidder. Along with that email, you're also going to get a notification that says these are the Real Bay pre-approved vendors targeted to that specific location of the property you
that's
purchased.
cool. And are there other websites that, there are other online auction websites, but I think you said that they charge a fee, right?
Yeah, and nobody does what we do. Nobody has the combination of live bidding auctions and a fully functional social network. That social network is the key because, there's websites that are there's three of them. There's auction.com that I'm aware of, there's Bid for Assets, and there's Realty Bid. They all charge an insertion fee, typically around a couple $100, and they all charge some type of a percentage after the fact, anywhere from 1 to as much as 10% that can be paid by the buyer or the seller.
That's a little higher than a real estate commission.
Yeah, well, Realty Bid does it as a commission. I believe they charge 1 or 2%. Don't quote me on that, but it's around there. Bid for Assets charges a 10% premium. We initially were thinking about having a cheaper insertion fee, but we just decided, you know what, that's too confusing. Let's just make it free. Everybody understands free. And then the key is for us, since we're not charging any fee after the fact, we don't cut off communication between the buyer and the seller the way the other websites do. We want you to communicate because we don't care what happens after the fact as far as taking money out of your pocket. We just want both sides to be happy and have a positive experience.
And so the whole idea is strictly for the advertising. I guess sort of like how Facebook didn't charge anything, right? And then just hopefully get advertising.
Google's the same way.
Yeah.
That's right, and it's funny you mention those two because when we were thinking about the model, we looked at the most valuable websites like Google, Facebook, LinkedIn to a certain extent, and we say, you know what, none of these are really charging their member base anything, and we want to be that website for real estate that does the same thing, where we don't have to, rip off our member base. We can give them a free interactive user experience and still have a successful website based off of the traffic.
Well, Stefan, thank you so much for calling in. I know you're a busy guy for real estate auctions on Real Bay. We're listening to Stefan Piscano, and we're going to cut to our second commercial break. And here is the trivia question. Again, the theme is superheroes. Spider-Man is his alias. What is his name when he's in street clothes? The first three callers with the correct answer win the free three-day, two-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Spider-Man is his alias. What is his name when he's in street clothes? Call 888-912-1190. Make sure to include your name and your address and your email address, and make sure that you spell that email address slowly and spell it out for us. And we'll be right back. Great.
Spider Lady.
Spider Lady. That's not the answer. Toby Maguire. Thank you so much for joining us.
You know that one.
Yeah, please get back to us and let us know how many people bid, okay?
Yeah, I definitely will.
All right. Thank you.
Thanks, guys.
Thanks, Stefan.
You guys ready?
Yep.
Such a ham, I tell you. All right, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Honth and Robert Schitt. Thank you very much, Stefan Piscano, for joining us. And again, remember, listeners, go to realbay.com after the show and bid on that house. Starts at $1. You got to love that. When we cut to the second commercial break, we asked this trivia question. Again, the theme is superheroes. Spider-Man is his alias. What is his name when he is in street clothes? Anyone?
Well, you didn't say it was the new Spider-Man or the old Spider-Man.
I don't think it matters.
Tobey Maguire.
Tobey Maguire, but that is not correct.
No.
He was the actor.
Peter Parker.
Peter Parker, that is correct. Very good. All right, we are going to get right into email time here. And Mark, we have an email for you. A listener says, hey, Mark, what? Well, he doesn't really say, hey, Mark, I'm adding that part. But he says, Mark, what makes you different than other private lenders?
Aha. Oh, I love that one. My company, for new listeners, is Pacific Private Money. We're based in Marin County. We do real estate loans to real estate investors, and those loans are funded by private individuals. Hence, it's called private money lending, and our company is Pacific Private Money. Well, the good news is whether you're a borrower client or a lender client of Pacific, I think the fact that my background is real estate investment and development, not banking or conventional mortgage loan origination like many out there who are now doing private money loans because, you know, conventional lending isn't what it used to be. The demand isn't quite there anymore. I think the fact that we have both me and my staff, we're all real estate investors by trade. We understand the real estate investor. So if you're a borrower coming to us, we speak your language. If you're an investor, we're pretty good at sniffing out who are the phonies out there. So again, we get a lot of applications every day, and our preference is to work with experienced real estate professionals. So if you've got experience, you've been flipping homes, you've got equity of your own, or maybe you've got an equity partner and you're looking to leverage that because maybe you want to make sure your equity partner gets a better, higher rate of return, and you use leverage to do that, we really love to work with people like that. In fact, we have a lot of repeat clients who are out there buying, fixing, and flipping property, and so our investors really like those loans because they're not long-term. You know, we write those loans for 12 months, and oftentimes they're paid off in 6, and meanwhile, our investors are getting yields anywhere from 8 to 10%. And back to the borrowers, we're just really fast at analyzing a deal, and most of our existing investors are pretty savvy and can fund a loan in as few as 5 business days from start to finish. So I think we're really good at what we do, and we're very dependable. We've as far as I know, never left a borrower at the altar who expected our loan to close and we didn't close. We've just got to
Yeah, as long as you've given a commitment letter, then you funded it.
Yeah, absolutely,
that's
absolutely.
important.
So that's and not that there aren't other good private money lenders out there in the Bay Area. There absolutely are, but there's actually a difference. I mean, private lending or what used to be called hard money lending has been around for many years, and there are companies that have been out there for 10, 15, 20 years, but companies like ours, we started our company post-recession. So in other words, we had the subprime meltdown and all that stuff happened in 2007, 2008. We started our company in 2008. So we've been lending on these new values, these new adjusted values, whereas companies that have been around for longer, a lot of them have non-performing loans on their portfolio. They've got maybe angry investors. Many of those companies aren't even lending, or if they are lending, it's just not their primary business anymore because they're taking care of investors that are stuck in loans that are underwater. So, the new guys like us, we're just pretty excited about this industry. We come in as a result of the banks leaving the market for real estate investors and providing a service and capital that's needed, which really I think is contributing greatly to the Bay Area economy. So if you're an investor with Pacific, you are contributing to the economy because we are putting that money out to work. There's a multiplier effect when you lend money to individuals who repair property and put it back on the market, either as rental property or to
well, that'll just help their own property that much more.
Absolutely.
It kind of feeds upon itself.
Yeah,
and remind our listeners how to get a hold of you, because I'm sure some of them want to get 8 to 10%.
If you're an investor and you'd like to know how to put some of your money to work, maybe your IRA money or other savings, you want to go to our investment website, and that's at PacificPrivateInvestments.com. Investments is plural, and again, it's all one word, PacificPrivateInvestments.com. If you're a borrower or real estate investor and you want to learn how to maybe use leverage, private leverage to grow your real estate portfolio, go to our borrower website, and that's at PacificPrivateMoney.com.
All right. Thank you so much, Mark. You can always go to bestofinvesting.com and check on Mark there. And Robert, we received an email for you. The Fed announced a few weeks ago that they were going to keep interest rates low until 2014. Do you think they will keep to that strategy with some signs that the economy may be improving? I mean, just look at the stock market. It's over $13,000.
The stock market is going high, and traditionally when the stock market gets higher, it means that funds have come out of the Treasury bond market, and when the funds get out of the Treasury and go into the stock market, traditionally the rates go higher. And that did happen the last couple of weeks. Interest rates crept upward. Will that continue, or what's going to happen in the future? Well, it's an election year, so everything becomes political, and especially the amount of the economy that has to do with housing is very critical to what happens. So,
but now did the Fed...
The Fed has done quantitative easing several times over the last few years, which meant that they've pumped significant amount of money into the mortgage lending pull to allow the rates to go down so that people could borrow more in the hopes that it would spark the housing market, which would spark the general economy. Will they do that in the future? What we're seeing is there probably won't be more quantitative easing, but when they make a statement that over the next, not short term, but for until 2014, well after the election, well after the next administration is in place and functioning for several years, that shows us their aim at having a stability in the market, and they want people to rely on the fact that interest rates, although they fluctuate in a range, will probably be in a very narrow range for the more than the near future, probably for at least a year and a half, so that people should expect there to be real stability in the rates. Now, every day they can move up and down a little bit, but I think that, and everybody tends to think that they'll be in a very narrow range over the next
But they're not
couple
going
of
to,
years.
you don't anticipate them changing, let's say, the discount rate. And they said
There's-
that they're going to,
There is not a lot to go there. I mean,
well, I mean, to increase it, right?
I
mean,
don't
if the
think,
market-
no, I don't think so. And as the economy starts to heat up, there will be some pressure to raise interest rates, but I don't think it'll be very fast, and I think it'll be a gradual increase over the next year or two.
Now, Robert, even if the Fed does keep the prime rate steady, let's say through 2014, that doesn't necessarily mean that mortgage rates might not go up. What are some of the factors that affect mortgage rates?
The mortgage rates, unlike credit cards and other auto loans, really aren't affected by the prime rate as much as they're affected by the 10-year bond rate. And so that you can pretty much track where the 10-year bond rate is going and where interest rates on mortgages are going.
Does that tend to get affected by what? Is that global issues in nature, or is it more domestic, or what tends to make that move?
One of the big factors is where money is going. Is money going into the stock market? And so when we see the stock market, the high levels they are right now, that's an indication that money has come out of sitting on the side in money markets or bonds and gone back into securities and into the stock market.
And that has upward pressure on 10 years.
Certainly, when there's less money in there, then it's going to cost more to borrow.
Yeah,
But
also
even
the-
so, the stock market is the highest it's been for years. The interest rates are still historically incredibly low, and the move that they made in the last month or so is maybe a quarter of a percentage point.
Well, you get probably average Joe investor who's been sitting with 0.01% interest and sees the stock market go from 10,000, 11,000, says I want to ride this gravy train back up again, and that's probably what's pushing a lot of money back into the stock market.
Yes, absolutely.
Okay. All right, guys, thank you very much. We're going to go to our third and final commercial break, and again, the theme is superheroes. Here's our final trivia question. Superman is his alias. What is his name when he is in street clothes and glasses? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. Mark, I see you writing stuff down there. That's 888-912-1190 to answer this question. Superman is his alias. What is his name when he is in street clothes and glasses? Make sure to include your name, address, email address, and make sure that when you give your email address, you speak slowly and spell out each letter for us, please. And we will be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Robert Schiff. And when we cut to the third commercial break, we ask this trivia question. Superman is his alias. What is his name when he is in street clothes and glasses? Anyone?
Brad Pitt?
Brad Pitt?
When he was in drag, it was Lois Lane.
Come on, people, hurry
Let's
up.
see, Clark Barr.
Clark Barr.
Clark Kent.
Clark Kent.
Yes.
That is correct. Clark Kent. Okay. Hey guys. Okay. What is the word on the street?
Well, it's the word on the street. Yeah, what's
Just
the
in
word on the
general.
street?
Just in general. What's the word on the street?
Well, it's almost the end of the first quarter, and what I've found is that I just know that I'm hearing anecdotally, everybody I talk to, there's just a lot of confidence that we're kind of out of the woods with respect to the recession. In other words, when I say out of the woods, it's like at the very beginning of the year we were talking about whether or not we still were maybe heading in for a double dip recession. We just had like the worst fourth quarter in 2011 was horrible for real estate sales, and so a lot of us were trying to predict where, was 2012 going to be a repeat of 2011, or are we really going to see, signs of economic recovery?
Or did we actually go through a quick little double dip?
Well, we could have,
I think there might be truth in that.
Yeah,
yes.
we might
Yeah.
have dipped in and then we came back out.
But I think you're right, Mark. You certainly hear less talk about, less fear about us going back down into another recession, and it seems that everybody is, not that they think we're totally out of this and everything is great and the unemployment rate will go down to 5%, but there's the sense that we had as early as the last quarter or a couple quarters before, where there was a lot of fear of going back down further into recession, is not there at all. And a lot of indications and articles I've seen also say that we seem to be building a really firm base slowly towards a growing economy. At the same time, the whole mortgage default problem that happened, there's still a lot of deleveraging that has to go on globally, especially not just in our country, but there's a way to build a base and sort of slowly deleverage ourselves to a eventual really healthy economy.
Well, the panic sure seems to have disappeared, and you're right, the indicators seem to be heading in a positive direction. I'll be curious to see what consumer confidence, how that comes out in the coming weeks, because I think that at least if the anecdotal information that I get from talking to people every day is any indication, I would think that number ought to be heading in the right direction. Now, certainly, of course, then I wonder, are we living in a little bit of a bubble here in the Bay Area? Because we've got other driving factors that are leading to a stronger economy in the Bay Area, including